Good morning. It's Harvey Jackson. Just going to go through USDA report. It supported the canola. When we had a lot of activity yesterday, we were going short canola based on the story yesterday of the Chinese tariffs. I still believe that that is actually still going to have a lot of weight on this market, but we cannot, you know, uh, hold back this market if the soybeans are taking on, smaller ending stocks. And let's just get into this because I know there's going to be a lot to cover here. So the story here, it's the same story as yesterday. Nothing has changed in this, but it's reiterating maybe the dollar value of some of the exports. I'll just quickly get through this. Some of the exports, I don't have the recent numbers, but just how important the Chinese market is to canola in Canada. But we'll get into that in a bit. So what I'm showing here is the minute chart from when it actually basically went into yesterday's trade. So you started off at the 682, you dropped all the way down to the 656, and then fell all the way down to 636, and then we're edging our way back here. So the chart doesn't lie. I still think that there's going to be some problems, but just look here at the Fibonacci retracement value on the minute chart, and it's not a surprise that you traded right to the 50%, pulled back, but we still got this upward wedge trading going up here. It looks like we're going flat, but we'll actually have to see how this continues to trade today, and whether they're going to read into the news of where's this canola going to go is the question. And we got to find a dance partner that's going to buy this. Now, who is that going to be? And U.S. does buy a lot of our products, but can we count on the crushers actually picking up the pace, increasing the sales to the U.S. with U.S. trade all in flux right now too, right? It's difficult to deal with the U.S. at the moment. So here, just going through the USDA a little wee bit here, the biggest surprises were in the corn. Soybeans were a little bit, or corn and soybeans were both a little higher, but the acres were a little bit lower on the soybeans, and the overall ending production ended up lower. But that's not the case when it comes down to the corn. We had increased yield, we had higher than expected harvested acres, so you got a bigger production. So we dig into it a little bit, on the world side, you're going to end up with 282.54 million metric tons of ending stock production. So that's what made the corn market actually pull back. And it hasn't, corn and your wheats are related because there's a fair bit of positive news when it comes to the spring wheats and just overall all wheat situation. It's actually not as bearish as maybe the corn, but the corn and wheat are related. So if you can see here, you can see that where are these states that are increased their production, and you can see 188.8. There's probably a bigger lean to the near infrared and everything else. This is counting stocks and everything, but is this big crop's going to get bigger, or is this big crop's going to get pared down from here? Now, it all depends on the weather going forward from here on. Weather still looks okay. When you look at the soybeans, same thing. 53.6 yield production. It is still pretty darn good. So this is a summary of the same kind of information, but one that I want to point out is your world ending stocks decreased from your July estimate, and that should help wheat. And you got your spring wheat still, all wheat is down to a certain degree, and it's not a big change, but it's looks like spring wheat is still going to hold in there with decent yields. Now, proof is in the pudding when it actually happens. So Mitch Miller on X, he was just talking about the corn and how the USDA actually finally recognized that the corn export program is really robust, and that kind of helped the corn from free falling even farther than it did. This article is just talking about, and it's a good read, but at the same time, I'm just wondering if it's maybe got a little bit of a liberal effect in this article, because I don't maybe necessarily know, this media source if it's left leaning or right leaning, but it's definitely kind of downplaying the tariffs, and I think that's what the media is trying to do in Canada. They're trying to downplay the tariffs because X amount of tariffs are USMCA compliant, and it's saying to the effect that there's only going to be like a 6% effect of tariffs or effective tariff in Canada from the U.S. But it does mention that you're going to probably the higher tariff goods like your aluminum and steel probably will end up cutting back the purchases, of course, right? So and then your effective tariffs overall for all stuff that gets exported from Canada will go down. But it does point out here too that the 6% Canada's effective rate is well below the cumulative rate facing the United States. Other trading partners right now that RBC pegs are around 15 to 17%. So we've gotten less affected, and it even mentions that Mexico actually has a higher effective rate here as well. They're more like 4%, where we're closer to 2.5%. So I just quickly wanted to go through this. So here's your Canadian canola exports. And this is not the new sheet. I have to work on that. Maybe I'll get a chance later tonight. But you're looking at 7.6 million metric tons of exported canola expected. Now, that's not far from being correct as far as I can tell. And like I said, it's not updated. But that's a big amount of canola exported of the whole world exports. So when you look at the oil exports, Canada exports the most, and of the overall mix, right? So you can see that we did export less, but where I'm going to point out is where did some of these China buy the canola from, and they're buying in the neighborhood of 5 to 4.8, but they have bought less. Now we know that they have a large supply of oil and meal in their country, and they can maybe get away with it not buying the canola. But who's going to be our dance partner is the question, and I'll dig into that as we get into more reports. So China oil imports, they imported some from Canada. And United States is the biggest buyer of canola oil. So and they're buying a lot of that from Canada, and China's next, right, on the list. So let's just have a quick look at the weather. Here's your 14-day precipitation that's happened, and you can see that the prairies got covered pretty well, and you do not see a problem in the U.S. If anything, it might be too wet. Here's your active weather. You're still getting some smoke over here, and I'll just highlight that in a couple of slides. Your temperature does not get too high here, so that's a good thing. Here's just a precipitation anomaly. So you can see that there's maybe adding some precipitation in some regions and lack thereof in others. Now, that's the 8 to 14-day precipitation. Here's the European artificial intelligence. It's actually got a bit of a bullseye on those fires, and I'll show that in a bit as well. The same thing with the GFS bullseye on those fires. So let's put them out. Because it's almost exactly the same spot. So let's just maybe Mother Nature's giving us a chance to get some of the smoke dissipated here. So let's quick look at the oil seeds. Canola's up 650, a good recovery from where it was yesterday, even in the big swing that we had. Rapeseed is up. Soy oil is up 28 tenths of a penny. Palm oil is up. Crude oil is down, and your soy bean is up 8 3/4, and your wheats are basically down to a little bit to unchanged. So just a quick look. So when you see how this market is actually traded here, that big leg yesterday, and it looks like we're trying to recover about half of that leg. So just have a look at the European rapeseed. I flashed over it, sorry, but it's got a good leg up, and you can see the Canadian dollar here. You probably draw a line in here, and it looks like we're coming up to maybe an upward support line in a channel. Now, it is trading right at some of these moving averages. I do not have any, oh, sorry, this is crude oil, or soybean oil, and it looks like it could be continuing to try to trade up here. You look at soybeans, it broke out of this channel. There's some other areas that it probably needs to continue to trade. We need to get above this because it just traded to it, as I can see here. That leg that we have there to say that we're in making a higher high, and then the same thing above that to see if we actually have a momentum trend change. Your crude palm oil, like I said, has gone up pretty substantially. Here's your Canadian dollar, and it looks like it's doing basically nothing. But when you see the US dollar index, it's actually maybe trending down. But, well, if it breaks through there, we're looking at next support kind of thing. And that's pretty good for the ag commodities on the export market for the U.S. And that supports the Canadian dollar and corn, if the US dollar index can remain low. The other pairing that I pointed out a few days ago is the real and the US dollar, and you can see I put in the support line where it's currently trading, and if it breaks down lower, that makes it favors the US even more. So let's just cover wheat really quick. A little bit of a recovery, a little bit of green on the screen here. We're not breaking out of this slow stochastics for me to get excited about buying here. We need a few days of green on the screen for us to get back into wheat on the spring wheat side. Chicago still got this downward trend here, and the same thing with so that was Kansas, this is Chicago. And if we look at corn, made new lows. There still could be some more lower points in here, but to get in within that Bollinger Band, and it's basically out of the band rate at the moment. So usually it comes back in at some point here. So we can basically say that one's done. Now we're looking for the StatCan production estimate from StatsCan, and that'll be on the 28th.